Good morning, good afternoon, good evening, and welcome to the Thursday, 12th of January Bull versus Bear webinar. Here, Steve Miley on the call for TradeDay.com. Welcome, everyone. Welcome to CPI Thursday. It's going to be a busy day, right? Let's not blow our accounts before the CPI release, guys. Keep the powder dry. Okay, first thing, we did a technical Tuesday a couple of days ago. Well, I did a technical Tuesday a couple of days ago. It's in here. It's on Fibonacci, retracements, extensions. Take a look if you haven't taken a look already. Just runs at just under 30 minutes. So take a look at that. Technical Tuesday in here from last Tuesday on Fibonacci, retracements, extensions, what they are, how to use them, how I use them, and where I think they're useful. Okay, it doesn't take long to go through. Might be useful, at least see someone else's approach to those. Let's take a look at the calendar. No surprises in here. All focus on the CPI data that we have in just under 1 hour's time. So please do get ready for that. I would suggest don't carry orders or don't carry open positions into it, but be very quick to react after it. Remember, we've had, well, one thing to point out. I'm going to jump to, is it here? No, where is it? There you go. Traders lose trust in CPI data security in wake of volume shock. So do you remember the last release in here? Trading in US 10-year notes. There was a huge volume spike 1 minute before. Trading soared in the 60 seconds before last month's release. And there are some concerns maybe about a leak or a hack or something. There's been nothing official on that, but just be careful. What could potentially go on before. Okay, trading volume in the 10-year futures soared, reaching 3 times the level seen a minute before the release of any of the last 24 CPI reports. Okay, so a significant spike in volume, very strange in here. Okay, so be wary of that. Remember that happened, right? Do remember as well in here the last 3 CPI releases. Here's October. Okay, I think it's even this one in here as well, more than the last 3. I think that one there, that's September's, right? So even going back to here, September, a big old bearish candlestick on the September one, 12th of September. Let me go and even look up where it was before that. I think it was that one there in August, but certainly the September one is that one there, massive candlestick. Okay, big down day. Then we got the turnaround candlestick on the October one. Then we got this big impulsive candlestick on the this was the October one. This was the November one, and then we got the rally, and then the sell-off in here, the turnaround candlestick as we saw in October, but in the opposite direction. Back here in December with the leak data or whatever happened on there, that 1 minute trading. So it's going to be important. Market clearly positive. We've been rallying in here. I'm not going to go into loads of depth on the charts in here, guys. It's a matter of going with it. Levels. Remember that this can move, this kind of extent. So on the S&P in here, we're talking about the ranges for the last few. We've got range here. High low there is like 60 index points here. This massive day in here. High low there was 80, I think. More than that, maybe not. Low 37.83. No, that can't be right. High low 37.80. No, how's that right? 37.83. That's why. So no, what am I talking about over here? I'm way off here. Over here. So high low there was 40.17 to 41.80. Okay. So it was, sorry, what am I talking about here? It was 160 index points in here. On this day in here, it was 220. Okay. And on this day in here, the high low was 35, 30, basically 37, 200. So the market can move, right? So I think, trigger points, you could put an order in, but basically it's going to be a breakout one way or the other. And don't forget, on this day here and this day here, we saw a significant turnaround. So be careful as well, right? Be careful for the turnaround as well. Obviously, it sets up more bullish in here, needless to say. Let's just run through, though, what I've got in here for the fundamentals. But, so something from this morning, more than half of German companies report labour shortages. So showing that the global economy is still strong, a similar kind of thing we're seeing in the US and the Europe. The labour market stays very, very, very strong globally. But that can be putting up upside pressures on wages, obviously, and then in turn on inflation. So we've got to watch out for that. It's not necessarily a positive that the labour markets are staying strong. Wall Street was up, US stocks and European stocks up significantly yesterday, sharply higher. Optimism ahead of the key inflation report in here. I'll come back to 5 things you start your day, but all the same things. Stocks rise ahead of inflation test in here. World stocks were higher this overnight in here. Dollars at a 7-month low. So we're very much in risk on mode. Yen gains on report the Bank of Japan to scrutinise policy effects. Treasury and Eurozone bonds continuing to gain in here. Stocks climb, US futures becalmed before CPI data. So yeah, the market's kind of marking time this morning. Not surprisingly, we've got now less than an hour to the release. We've already looked at this one about the leaked data at the last release. JP Morgan trading desk sees inflation data bolstering a bear market rally. It still thinks that this is a bear market rally. I think the low's in. I don't necessarily say we're starting a new bull market. I think this rally has got much further to run on a bigger picture move. And JP Morgan's trading desk expect a dovish print to drive short sellers to unwind bets. So they're bullish in here of stocks. Indices data spur market volatility as Fed targets red hot inflation. What else we have? Futures muted ahead of key inflation. In here, the morning bid, disinflation elation. So, I'm happy that we're looking for lower prints in here. Argentinian, but also in here, there's got a little thought piece in here, which I'll come to just very shortly in here. So European bourses slightly significantly higher this morning. Remember that these closed before the close of the US markets, so they're playing catch up with the strong closes that we saw in the US averages, the US futures and cash markets yesterday evening. So European exchanges playing catch up. So we're up between 7 and 8 tenths in here between the UK, German and French indices this morning. But US stock futures haven't had a really strong day yesterday, up around 1% or more higher yesterday. Very muted this morning in here, pretty much sitting unchanged. I'm going to share this link in here. I hope you can access it in Bloomberg in here. I do have a subscription, so I'm not sure if this is free or not. The global war on inflation is far from over, pointing to Turkey, Argentina. Prices still running wild. China could be a wild card for the whole world. It's a podcast, Stephanomics. Okay, so you can subscribe to it on Apple Podcasts. So let me just see if I can click this link and if it will take me to the Apple. Oh yeah, it's on iTunes, so you can get it via Apple Podcast in here as well. So this is a podcast in here, Stephanomics. I haven't listened to it yet myself, but I'm going to. It looks interesting in here. I'm looking at the global backdrop to inflation. Okay. What else do I have for you? That's most of it. Let's go back to 5 things to start your day in here. Just going back to the calendar, actually, though, nothing really too much of interest after the inflation report. And obviously, it's going to take center stage and continue to be important throughout the day, as it has been for the other sessions in here. Going to 5 things, it's going to be all about the CPI, watching inflation, key US inflation data, M&A roundup, Subway's exploring a potential sale. This is not going to affect us in any way. It's all going to be inflation. Joe Biden's efforts to quell a controversy over classified documents in his private possession, subdued markets ahead, much awaited inflation data. So very little in there as well. I'm going to keep this brief today, guys. This looks very bullish. Trigger points on the top side. Well, there aren't any real obvious ones in here. I think it's really a matter of trading what's in front of you today. Technicals are important, okay, but we could see really big moves in here today. We could see a turnaround. Any technicals from this morning are going to be kind of semi-irrelevant for me in here, really. So upside levels in here, I don't think it's important. You're looking at breakout targets, whatever you want to use on your strategy. So below this little string of lows, maybe below like 39.84 would look more negative, and up through 4,000 looks more positive on the S&P. For the Nasdaq in here, same kind of thing. If we go to the 15-minute chart, string of overnight lows gathered in the kind of 11,450 area down through there and up through 11,500 looks more positive. So there's kind of some very narrow breakout levels. Let's look at the commodity markets and the treasuries. Treasuries first of all. Go to the daily chart. We look for it to be positive yesterday. It was positive. We're sitting up on recent highs. Clearly the break above the recent peak here. This is the US 10-year note. Break above the recent peak, that's at 114.23 and a half would be a positive. Then you've got this peak here, not far above there, but 115.11 and a half. I think they've got those right. Let me just double check. 114.23.5, and then 115.11.5, maybe even a bigger move than that. On the top side, if I step into the 15-minute chart in here, it's probably below these levels here, either 11 on the downside. You got 114.13 and 114.11, these two swing lows. So somewhere down through there looks more negative for the US 10-year note. Oil stays bullish, bullish with stocks in here. It's been rallying with stocks in here, rebounding, a decent rebound. Nothing too obvious on the, sorry, that's on the daily chart. On the intraday chart, probably back down through 77. Looks more negative, and simply up through the peak looks more positive. And if we go to gold, staying bullish in here, it's making a new high already this morning and stays bullish, and that's because of, not because we're in risk on, it's because the dollar is weak dollar equals strong gold, strong commodity markets. So the dollar is on, as we said, a multi-month low, so making new highs here on gold, and again in here looking very bullish in here, just made a new high in the last 15 minutes. Probably going to need a break below 1882 to look more negative on gold. It's a matter of going with it today, guys, and then being ready to be flexible as well, because as you say, we've had some big moves. Two of the last four have seen moves in one direction and then reversals within the day. And two have seen the market just go straight line in one direction. So it's a matter of, it could do either. So there's no real guidance on that. And watching out, obviously, for that minute before. And obviously, the minute before, the market did, the treasury market spiked higher, stocks went higher with it. And then eventually, obviously, it turned around back on the December release. So, just because it goes in one direction, if it does, if there is another, we don't know if it's a leak or whatever, right? But whatever happened. If we get similar happening again today, the minute before, it's not necessarily the right thing to do to follow it. But, it's going to be hard. You don't want to oppose it either. Okay, so maybe wait for the data, or maybe just go with it, and then be ready to get out, though, very quickly. You've got to be flexible. Trigger, mouse fingers at the ready, trigger ready in here, and be flexible in here today. That's what I think it's all about these kind of days. Great opportunities. Don't get sucked in beforehand, losing money beforehand. There's no point, I would suggest. And don't in here, I would suggest either run a position into it, right? You're better off just leaving it, have a trigger point in, either put in a stop entry or go with being very, very, very fast on the mouse. Okay, you're better off doing that and waiting for confirmation rather than carrying anything into the. You're gambling if you're taking anything in, carrying anything into the actual data itself. Okay, guys, it's a fairly short webinar, but it's all about CPR. There's very, 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 very little to say other than that. So I'm going to round it off there. Just remember, from tomorrow, though, once we do the aftermath of this, we do have reporting in here. So if I go to, I'm just going to check which one of these are before the bell. So if I go in here for the holiday calendar for tomorrow, we do have, actually most of these are before the bell tomorrow. Okay, so there are opportunities in here before the bell. We've got major United Health, and then a load of big financials: JPM, Bank of America, Merrill Lynch, Bank of America, Wells Fargo, BlackRock, Citigroup, all reporting tomorrow ahead of the bell. Okay, so pre-market trading could be interesting tomorrow if you're up and about early. So watching out for that as well, just as a heads up going into tomorrow. All right, guys, I'm going to wish you all a great trading day. Take care, stay safe. Helmets and goggles at the ready for the CPI release, and I hope it works well for you guys. Take care. Bye.